Hey, is your company transferring you to the United States? If so, stay here because this video is for you. Hey guys, my name is Erica Strong Rodriguez. I'm a real estate agent here in Southern Indiana. And in my market, we have a lot of big companies like Mead Johnson, Azteca Milling, and Toyota. Because of those companies, we have a lot of clients that come in from other countries. And we find out when we're working with them that if they had known that they could purchase a home, they would not have signed a 1-year lease at their apartment or the house that they're renting. Why? Because it is much cheaper to purchase a home than it is to rent. One thing to know is that rents can go up at any time, but your mortgage payment will always stay the same. Now, a lot of people don't know that you can purchase a home even if you just arrived to the United States a month ago without filing your taxes in the United States. But it is true. You don't need to have filed taxes to purchase a home here in the United States. Now, I say that, but I know a lot of different banks have different rules. So if a bank told you no, it might just be a matter of going to find a different bank. What they will ask from you is for your pay stubs. They like at least a month, in my experience, of pay stubs. And sometimes they will ask for a letter from your employer saying that you are now residing in the United States, that you will be here for at least 3 years, 5 years, whatever it is in your contract. Sometimes they ask for a copy of your contract and that they will apply for your work permit to be renewed. Now, this doesn't mean that they are guaranteeing that your work permit will be renewed because your company can't guarantee that, but they are saying that they will apply for it to be renewed. So what should you know if you decide to purchase a home? One of the most common questions that we see here with our clients is if the interest rates are fixed. This is really good news. They are fixed. This means that for the life of the loan, your interest rates will not go up. So if the day that you sign your home, the bank gives you a 4% interest rate, but tomorrow or in a year or 2 years, interest rates have jumped to 22%, just something crazy, your interest rate will stay the same. Now, if interest rates go the other way and they get crazy low like they were last year and the year before that, and they get down to 2%, and you want to take advantage of that and refinance your loan so that you can get a lower interest rate, then you definitely can. And if it makes sense for you, then you totally should take advantage of that. And that's one of the beautiful things about having your home is that you can do that. You can take advantage of a lower interest rate and lower your monthly payment. However, when you're renting, the chances of your rent going down are very, very low. In fact, your rent's probably going to go up every year. Now, when you purchase a home with a work permit, the type of loan that the bank is going to give you is called a conventional loan. So with the conventional loan, you are going to need to have a credit score. So when you first get to the United States, you should apply for a secured or a prepaid credit card. This means that you deposit maybe $200 to $300 into this credit card. And then when you get your credit card, you will spend $20 each month, and then you'll get a bill, and you have to pay back those $20 that you spent, even though they were your $20, you have to pay them back. But then what happens is that company, that credit card company or the bank, will report that like a credit card, and you'll start to build a line of credit. So you should definitely establish your credit history to build a credit score. Now, I'm not telling you to get here and go all crazy and buy a car, furniture, a computer, a TV, and 5 different credit cards, because if we get a little too crazy, then the bank's gonna think that we are too risky buyers and they're not gonna lend us any money. Something to note is that I know in countries like Mexico, for example, when you purchase a home, half of that loan is with a bank, and then the other half, or 60% of that, comes from something called Infonavit, which is a government program that people pay into. Here in the United States, your whole loan is going to be through whatever bank you choose. It's wise to, when you get to that point, maybe compare a couple different lenders to see which one gives you the best interest rate and the best closing cost, or maybe even the best approval amount. Now, a question that we get kind of often, which is interesting, is do I have to pay off my home entirely off before I can sell it and buy a new one? I know that's the case in some countries, but in the United States, we don't have to do that. So if you move in today and a year from now, your work transfer you to a different location and you have to sell that house, or maybe your family has just gotten bigger and you need more space, you can absolutely put this house on the market, and whatever is owed to the bank will be paid off directly to them at closing. Any difference, so any profit, you can take that cash, you get to keep it, and you can use that as the down payment in your new home, or whatever you need to do. You could buy a car, whatever you want to do. I hope this video was helpful. If you have any other questions, whether it's on this topic or any other topic that has to do with real estate, please leave it in the comments and we will gladly answer any questions and make another video for you guys. Give it a like if this was useful, and I'll see you guys in the next one.